Let me know in chat if I'm lagging at all. All right, because I'm recording, and one time this was recording, I started lagging for some reason. So just add me in chat if you start to hear me lag at all. All right. So let's see. Okay, so on Discord, actually, this play actually just played out. So on Friday afternoon, I was live trading on my own Discord for some of my members, and I drew this line. So I saw this, which is liquidity. And by the way, guys, again, I do the same spiel every single time I start a class, but I'm doing ICT review stuff, so if you don't know what ICT is, either watch his videos or go on YouTube and watch my videos explaining what that is. New mentions. Yes, I can. Alright, there you go. So I'm going to be going over this play. I actually I alerted it in Discord. So if we go to my channel real quick, where is it? It's right up here. So right here, Friday afternoon, I said trying this, go light if you're green, and you can see this is the I think it's the this is the 3-minute chart. And the entry, it's really hard to see right now, but the entry is in this 3-minute fair value gap. So basically what happened when I alerted that, you can see that this was the 3-minute fair value gap down at the long end, and you can see that we bounced just before hitting it, which is kind of even better, because if you don't know what a liquidity grabs are basically we go under a low and then reverse. And I really like plays where there's kind of liquidity grabs with a fair value gap right under it. So you can see how this bounces, but then there's a fair value gap under it. And technically this is the whole fair value gap. So it did bounce like the top of it, but it still set up this kind of inducement model. And this is what this is actually called. This is called inducement, when we go under a low and then bounce in a fair value gap. So you can see there's still a lot more fair value gap left under this. So that's why I wanted to kind of play this, and I wanted to entry more at 3902, which is where I entered tonight when the market opened. And you can see 3902, the bottom was 3901.75, so I was 0.25 off of the bottom taking that. And like that's just something that is, it's how the market moves. Okay, so what the market maker do is they bring it under this low in this fair value gap, and that's when you get in. And this is a really good spot to get in, because your average retail trader is going to be like, oh, that's a break in structure. Well, no, it's not. And they're going to go short, and then they're going to get wrecked. This is not a break in structure. This is just inducement. Why? Because there's a fair value gap under there. And I still have a bullish bias, because, first of all, if we look at the 1 day, here's what I think is going to happen. I think we're going to go up to this fair value gap, okay? And I think we're going to go up to this fair value gap, and I think we're going to reject it and then go to yearly lows again. So if we're in this by FOMC, then I think FOMC is going to be bearish, okay? Chart knows before the news. Remember that. And also, it'll also give us this kind of breakout. So we'll hit up here, then reject. So that's kind of my bias right now. But on the 5-minute, like, you can see that I got a free 5 points just from this model at open, okay? And this, I actually wanted to long in this fair value gap as well. But as soon as we gap down under it, this becomes invalidated. So this means that this is a void, okay? And the market will probably end up filling this void because there was no bidders, there was no askers right here, there's no price traded here. So this is called an inefficiency. So it doesn't matter, like Friday afternoon, it doesn't matter how big of orders there are sitting in here. If we gap down, it doesn't matter how big of an order is sitting on here. It's just a place where we gap down and price isn't kind of traded with. So right now, if we look at the 1 minute, we're actually in a fair value gap right here that we just rejected, and we have the market structure shift right here. But would this be a market structure shift? Well, if we look right here, there's a 1 minute fair value gap right here as well. So, and I'm bullish because of this gap right here and this inefficiency. So I think we're gonna go fill that. So we're gonna see what happens. But I probably wouldn't take this fair value gap if it was me, even though this could work. But I'm bullish. And also, if you look at the 4 hour, I want to point out something else. So I made a video on my YouTube going over the buy and sell models, and if you kind of look at this on the 1 hour time frame, you could see this was a clear buy model curve, and this giant wick from earnings was the liquidity grab, and the liquidity grab was under these equal lows. So market goes under these equal lows, people go short, and longs get stopped out. And if we draw discount, you can see it wicked right under the 0.5, which is perfectly in discount, okay? And I actually was interested in getting an entry down here. I was eyeing that. I had a lot of hopium that we'd go down there and then bounce, but we never got it, unfortunately. And again, look, this is the same setup I'm showing you guys that just played out on the 5 minute open. Same setup. So I wanted something like this. So this is your liquidity grab. So I wanted to go down just under it, bounce in this fair value gap, and then boom, go up here. But unfortunately, the market will leave without the entry sometimes, which is unfortunate. But why did I kind of want it to go down from here? Well, if we look at the daily, we had a fair value gap right here, which is another inefficiency in the market that is usually always filled, and we had a volume imbalance right here. And if you guys don't know what a volume imbalance is, it's basically this. See how this open of this candle is open above where this closed? That's a volume imbalance. So like this would be a volume imbalance, but like this would not be a volume imbalance because this open overlaps with this close of this candle. Like right here would be a volume imbalance, but we already filled that. So usually these volume imbalances and fair value gaps get filled. That's why I was kind of bearish coming down. I wanted to go down a little further though. Unfortunately, that was not the case. And let's see how we open tomorrow. But this fair value gap could get filled before this daily candle closes tomorrow. So I'm going to be watching structure, obviously, to see what happens. But that is something I'm eyeing for. Maybe that fair value gap gets filled, and then we go up. But again, I'm still bullish because of this gap right here. This is another inefficiency. And in the 4 hour, I think we just barely missed this, okay? So if you see this is another clear buy curve. So let me just draw that out for you. So this is the buy curve right here. Again, if you don't know what the market buy model and sell model is, go watch my YouTube video. You can DM me for the link if you want. But this is definitely looks for like another buy curve. This was your liquidity grab down here. But yeah, notice how we just barely missed this. You can see that we like this high. This candle is, let me check real quick, is 3925. This high is 3924.25. So either we're gonna come down and bounce in one of these fair value gaps, or we're just gonna go up from here. But I'm fully confident we're gonna hit this line. And then this would be the next target right here. But there's more liquidity above rather than below right now, in my opinion. I mean, this is decent because there's a fair value gap under here, but we already wicked under the 0.5, as you guys can see, so I don't see any reasoning to go down here. And there's no more daily fair value gaps, or there's no more volume imbalances on the daily. So I'm bearish until we hit this fair value gap here. And we're also nearing a weekly FE or a weekly order block as well. So again, that's gonna be this open to this candle before this down move. So I think we're what my guess is we're gonna go in that daily fair value gap, and the daily maybe we'll get a candle close in it, but I think we're gonna do it fast enough so it creates a wick on the weekly, but we'll see. But I definitely think we're gonna reject somewhere around here, then go way down, but we'll see. So I'm just gonna go over a few more plays I had from last week and kind of go over them real quick. So I had this next target in my opinion. This was buy side from a larger time frame, 4-hour model, and what ICT says is every single time there's a 4-hour model, where do we have to hit? We have to hit liquidity. So when we bounced under discount, even though it wasn't a fair value gap, it was a fair value gap in a smaller time frame. When we bounce in discount and we have a strong candle like this, well, your target is right here. I saw we hadn't hit liquidity yet, so that's why I said we were going to hit that. And then I did actually take a couple of long setups up to that line in the smaller time frame, and that's why it's so good to have a bias, because if you know you haven't hit buy side for the bigger model, then you can go in the smaller time frame and you can look for long entries on the way up, which is what I do. And see how I kind of noticed this, like I kind of put this when we're close to the line, but in reality we were at 3879. And when I posted that, so we were right here, and buy side was at 3890 or 3900. I mean, we still have 20 points we can get. Okay, so if you realize it's a buy model, even with 20 points left, that's still a lot of points, and then you can look for long entry your way up there. So even if you notice a little late, it's still really important to notice late, because 20 points is great. And 0 DTEs, if you're an options trader, those could probably go like 100 to 200%, because actually no, probably like 500% if it was like SPX 0 DTE, because 20 points is $2 on SPY. $2 on SPY is getting 2 options contracts strike prices in the money. So especially if you're playing this out of the money counts. So let me go over a few more real quick. Okay, so this was an unfortunate play. I never got filled for this. I know some people did in my Discord, but basically this was from Friday morning. I said entering long at 3826-ish, 4-point stop. So this was the 3-minute chart. I'll show you exactly where we were. Let me just remove this. So this was actually a great play if you got filled. So I had a limit in this fair value gap right here, and this was the 3-minute. But what I was trying to wait for is the 0.705 fib. And if you notice, I just saw the fib from here to this high, and then I kind of walked away. But my mistake was I walked away and I never realized it formed a new high, then came down. So if I realized that, I would have changed my entry point. I would have drawn my fib right here, and I probably would have gotten filled if we were 2 points off this, because usually I enter a little before. But you can see the optimal trade entry rose by 2 points, and you can see what happened. It ended up going like 50 million points, and I was bullish this day because it looked like a buy model up to. It looked like a buy model up to this point right here. So that was my first kind of target. It looked like on the smaller time frame we had that nice curve that I talked about, and we had this liquidity grab under these equal lows. So that's why I was bullish that morning. There's no way I was going to short that, and this was a clean fair value gap. So someone in my Discord did get filled, and I think a few people actually, but something you can do is market buy if you see this giant hammer candle out of this fair value gap, and then your stop loss would be below this candle. But again, that's risky because it's kind of chasing, and you don't really want to chase. But if you see that reaction and you know that buy side is way above, and you see his buy model start the curve, then I would recommend just chasing it and kind of go with a little looser stop if you're more confident. But if you're not confident, just don't chase it and wait for another entry. And again, other entries could have been here in this fair value gap. I would have liked to see this one instead, but we never got to it. So sometimes what I'll do, I was telling someone this on Friday, sometimes what I'll do is I'll enter in the first fair value gap, and if this play fails, even though it doesn't a lot, usually if you do enter in this, you'll get it like an initial move. If this play fails, just re-enter down here, and then or re-enter down here. And if you do journal your trades, then you know you take losses. So maybe if your win rate's like 90% and you're on like a 9 win streak, well, you got to tell yourself that your next play will probably be a loss, but that's okay because that's how you're profitable, because you know your next play after that will probably be a win. So like plays like these are usually my losses sometimes if I try entering a fair value gap before we get down to another fair value gap. But if I do enter and it does work, then I mean it goes hand in hand. So yeah. Let me go over one more play, maybe. So this is, I said not looking for shorts anymore when we hit this point. And this was on the 15-minute, I think. It was on every time frame, but basically what this was this is 1027, 3827. Trying to find out what this is. Oh, I know what this was. So again, this is the same setup I just showed you guys in the 5-minute. See how we have this low here, and then we have this fair value gap under it? This is why I was kind of bearish to this low. I wasn't planning on longing this because I knew earnings were coming up. So if earnings weren't there, I would have longed this. And you can even see as soon as you wick into it, it technically did work. Like 3817 to, so we got a 20-point move off this anyways, and then we ended up rejecting this fair value gap. So I mean, you could still bank off these, but I wasn't planning entering because of earnings. But look, my target was right there. Look, you can see as soon as we hit my target right here, see it? This is where my target was. As soon as we hit this, you can see we retrace 3823 to 3850. We retrace almost 30 points. That's why I said hopefully no one went short right here. And I kind of gave the bias. I said not looking for shorts anymore because we already hit my target. So I was just kind of trying to help people out because that was it. I was actually out that day. I was not on my computer, and I try not to trade on my computer. So that was kind of like a direction I gave. This was a play this is more of a counter trend play, and you can see this was the last possible fair value gap before. Here, let me zoom this out. Let me see if I can get this any bigger. 1 second. Okay, so this play was risky. Why? Because in this screenshot, I remember the bias was bullish. This was at 3845. Let me see if we can find this. It may have been like up here or something. Let me see. Let me see if I can find it real quick. This is an important lesson to learn. Okay, it was right here, I think. So in this situation, it was right here, I think. We had this fair value gap at 3848, and I was bullish, but sometimes what I'll do is I'll counter trend these. So I'll buy these last possible fair value gaps, and on the 1 minute there's more fair value gaps right here, but this was the last kind of possible one. So that smart money has to enter there if people are gonna take it. So that's kind of why sometimes I wait until the last possible one. And let me just exit this out. And you can see I got 5 points off of it, even though the bias is bullish. And why was the bias bullish? Well, we had this giant unfilled fair value gap right here, and we have the daily fair value gap way up where I talked about, and I was kind of bullish because I thought we would hit this kind of buy side liquidity because this was a model in itself. The model being, if you draw this, the model being we hit discount and we bounce out of this fair value gap. So I thought we were going to hit up there in advance anyway. So that's why I was kind of bullish, but I still kind of tried this for a counter trend scalp. And then you can kind of see it reject, rebalance, we create these equal highs, and what happens when we create these equal highs is perfect like this. The market makers will always run these, no matter what, 99% of my time at least. But you can see as soon as these equal highs were created, we took liquidity under here. This was the low taken before the reversal, and then we reverse. So that was more of a counter trend scalp. Those are more riskier, but you can still have a really high win rate on them because, again, these fair value gaps are very, very good entries. And a lot of times, even the ones you're not supposed to take, as ICT explains, a lot of times they'll still work for like 5 to 10 points, which is kind of crazy. This is my prediction 1027. And this is kind of, I'm going to finish off this class with this. But basically, 1027, which is, I think, Thursday, I posted this buys for open. Said, I think we have more upside on ES. This is DXY. We should test this fair value gap at some point, which means DXY down and ES equals up. So DXY is kind of the inverse. I'll take a look at it throughout the week. And let me explain this because what I just said was probably confusing and you probably have no idea what that even meant, because I know I wouldn't either if I was in your position. So what does that mean? That means we have a bullish fair value gap up here. So if we go down on DXY, that means ES is going to go up, okay? So as you can see, we kind of bounced out to hit this liquidity. So ES went down a little when this happened. And we have this unfilled bearish fair value gap here. So my thought was this could be like half inducement, half a market structure shift, more of a market structure shift in my opinion, because we have a failed swing low here, which means we never hit this high, which looking at this now, I see these equal highs, which kind of suspicious, but so maybe we go down here, then hit these equal highs. But if DXY goes up like this, I kind of expect ES to go down. I think Friday I was watching it and they weren't inversing each other totally, and it depends on the day, but usually they do really inverse each other. But I think DXY and ES were both bullish on Friday. But anyways, what I think is going to happen is we hit this fair value gap and then we rejected this fair value gap. So when this happens and when DXY goes back down, that means I think still more upside for ES. And that does match my bias with ES because, like I said, I think we're going to go fill that daily fair value gap on ES. Let me just go to 500, ES 500. So the matches my bias because on the daily, I think we're going to go fill this fair value gap. So it lines up perfectly in my opinion. And then I think we're going to hit yearly lows. So, I mean, if we look at DXY, that literally lines up perfectly because I think we're going to hit this and then we're going to bounce and then we're going to go to highs again. So we'll obviously see what happens. I think the highest DXY has ever been is right here, 164. And look what's playing out right now. This is the buy model. So where do we have to hit? We have to hit way up here in order to complete it, which goes along with my yearly bias of we're hitting lows again. So we'll see what happens after that. This doesn't look bullish. I'm gonna be honest. It doesn't really look bullish to the point where we're gonna hit up here, but it does look bullish to the point where, like, this fair value gap right here. So maybe we go right here and then reject, which means we'd go to 133, which means ES would probably be around, it's hard to say, maybe around 33,000 to 2,900, 3,000, 3,100, somewhere around there in my opinion. And this is kind of my first time looking at this, so I'm probably going to study this a little later and kind of check some other time frames. But it definitely does look like we're in a buy model on this right now, which means we're going to hit up here, in my opinion. But we'll see how that kind of plays out. So that's all I have for tonight. Does anyone have any questions? Just feel free to unmute your mic and ask me if you have any questions. This is recorded, by the way, so... I'll give you guys like maybe a minute. Do we have the fair value gap how to set up video? What do you mean? Like how to spot a fair value gap? What do you mean by that? Yes, so that was the first ever class I did in here. And if you go to my YouTube, let me just link the video real quick.
What is going on, guys?
My channel. So I'll show you what a representation of what a fair value gap is real quick. But I'll also show you the link for this one. Let me share this link. Okay, so this is the link for the ICT concepts explained in only 20 minutes. This will tell you what a fair value gap is, but I would watch this right here. Where is it? Oh, it's in education. So this is what a fair value gap is. So it's when these wicks don't overlap. So see how this wick in between this candle and this wick, this low does not overlap this high, and this high, or this low does not overlap this high. So this is what a fair value gap is. And if you go on a chart, you'll see a lot of mini ones. But like this is a fair value gap. See how this wick does not overlap this wick? It kind of creates this gap. This is a fair value gap. This is a fair value gap. This is kind of one. It's really small though. This is a fair value gap. So these are all fair value gaps, and I teach you how to know which ones to take and which ones not to take in that video. So this is just how the basic drawing of how to know what a fair value gap is. So hopefully that helps answer your question a little bit. Any other questions? So the 618 is just kind of normal retail fibs as retail knows it, but the 0.705, it's considered the optimal trade entry by ICT. And to be honest, I don't really oh, that probably just means ES is dumping right now. And to be honest, I don't use it a ton, but if it lines up with a fair value gap, I will use it. So like in this example, if we draw it from this low to I think this high to this low, never mind that. No, don't scratch that. Let me go to another one. Okay, right here. So if we draw from this low to this high right here, you can kind of see that the 0.705 is considered like the optimal trade entry for ICT. And basically what that means is it's a very, very high probability entry below the 0.618 because I forgot the video where he explains this, but I think it's because a lot of retail enter the 0.618 and they'll see it go down under it, which means they'll stop out, blah, blah, blah. But this 0.705 is kind of another really good level because it's, again, it's a high probability entry. It's under the 0.618 where most people enter anyways. And the other two fibs are the 0.79 and the 0.62. So it's kind of these three. And a lot of times if you go backtest this you can kind of treat this as like a demand zone. A lot of times we'll go under the 0.618 to this 0.62 to 0.79 area. This is what ICT teaches. I would definitely recommend go watching his video on how he explains optimal trade entry because, to be honest, I don't use this that much. I just know the fibs. but it's just a more high probability spot for hitting buy side after bouncing off this, rather than if we bounce off the 0.618, there's a possibility we reject the 0.382, then go down. But I would definitely recommend watching his video on that. I think I watched the beginning of it, but it's just another strategy that I kind of don't really need, because my normal strategy is fine, but sometimes I will add this in to see if it line up. So yeah, no problem. Any other questions in the next minute? Yes, I think that not in the next, like, not soon though. I'm still short-term bullish right now until we get up to this 4,000, 4,050 area. But I think we will end up hitting them again probably in the next year or so. So yeah. But again, that could possibly change depending on inflation in the Fed. I think as long as Joe Biden's in a president, I don't think inflation will go down very much. So I think we'll just keep going down. But again, there's going to be these rallies first. You don't want to be short. Let me check the monthly real quick because I want to see something. So on the monthly, you can see that we bounced off this fair value gap right here. This is where I longed. This is where my bias turned bullish a couple weeks ago, this fair value gap. And if you notice, there's no more fair value gaps under here, which is not that bearish. There's a volume imbalance here that was filled. There's no more fair value gaps or volume imbalances down here. And there's this fair value gap right here. Let me see if this is in discount. And we just bounced out the 0.5 fib, and I don't... So technically that means we haven't really hit the true discount area yet. It's hard to say. I think it's going to depend on the Fed, but as long as CPI stays kind of in the 7.5 to 8 area and doesn't go down that much, I think we're going to rally up here and then hit short-term lows. And ICT himself has a target of 2,900, which would be kind of this area right here, 2,900. So it'd be this order block. So he thinks we're going to bounce off this order block right here, which is this red candle before that move. But again, it's hard to say. It's going to depend on the Fed. But so far, the chart has known before the news. So I'm just going to keep playing it. I don't have $1 billion swing position where I'm betting it to go down here. I just play intraday setups, which is why my win rate is probably, I think my win rate's like 90 right now. But this is just my long-term bias. Again, I'm not just going to swing a position way down here. I'm just sitting to see what happens intraday. But yeah, I know ICT's target is 2,900. Mine is like 3,200, which is higher than his, but we'll see. Oh, you don't? Yeah. So ICT is basically the stuff I'm talking about, like the fair value gaps and order blocks and stuff. It's basically how the market moves. I used to use indicators, but I just use ICT now because it's kind of how the market moves. Yeah, no problem. Nice, nice. Yeah, I do have a... No, I agree. Yeah, I agree with that. So I have a friend who thinks we're gonna end bullish in December, at the end of December, and then once the new year starts, he thinks more downside. But it kind of relates to the thing with time and price in this market, which the yearly candle is gonna close after December. So he doesn't think that we're gonna go down until that yearly candle closes. So I could agree. I do agree with that as well. But again, I'm gonna play the intraday setups. No, I'm not. I'm talking about one of my homies named Fibness. You probably don't know him. Oh, you do? Yeah. What do you say? Wait, who is this? Wait, is this? Oh my god, dude! I didn't know this was you. I knew I recognized your voice. Damn, what's up? Damn. Yeah. I totally moved. I totally use this new. It's not really strategy. It's just how the market moves. But I mean, I'm really profitable. I'm doing a couple funded accounts right now that I'm very close to passing and stuff. But I knew I recognized your voice. Yeah. Yeah. Thank you. How are you doing? You good yourself? Nice. Yep. Yes, sir. Yeah, I've done very, very well in this market. I actually predicted the move from when we hit up here to yearly lows last time. So I may do the same thing again. I'm not sure, but again, I just play the intraday setup, so we'll see. Does anyone else have any other questions while we're at it? I'll give you like 20 seconds maybe. All right, so that is all I got for tonight. Again, we'll review next week and kind of what happens, but I am bullish this week up to this fair value gap. What I want to see happen is I want to see a run up into FOMC to this 3,960 area to 4,050 area, and then I want to see a dump as a result of FOMC. So I think FOMC will be our catalyst down from this fair value gap. But again, we'll see. But yeah, let me know if you guys have any questions. Let me know in chat. I'm always in my Discord or this one. Just feel free to at me. And other than that, enjoy the rest of your nights. And yeah, see you guys later.